Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RAPT Therapeutics Inc. quarterly report. RAPT Therapeutics Inc. offers a range of businesses and services including discovery and development of oral small molecule therapies, commercialization of treatments for oncology and inflammatory diseases, clinical trials for lead drug candidates, plus zelnecirnon RP-193 for inflammation plus tivumecirnon, FLX475, for advanced cancer treatment. These services are provided in the United States, with a focus on addressing unmet medical needs. RAPT Therapeutics, Inc.'s stock price has increased by over 25.61% in the past year due to several key news events. A major catalyst was the H.C. Wainwright upgrade from neutral to buy and a new price target of $10 in late December 2024, following a significant licensing agreement with Shanghai Gemingcare Pharmaceutical for RPT-904. In October 2025, positive Phase 2 trial data for RPT-904 was announced, demonstrating comparable efficacy and safety to omalizumab, but with less frequent dosing intervals. This news led to a reported 364% return over the 6 months leading up to October 20, 2025. The company's strong financial position was further strengthened by an underwritten public offering of common stock, raising approximately $250 million in gross proceeds. Analyst upgrades and increased price targets also contributed to the stock's surge, with Barclays, Wells Fargo and Company, H.C. Wainwright, and Guggenheim all revising their ratings and targets upwards. These developments have driven RAPT Therapeutics' stock price higher, with a 346% increase in 6 months prior to the public offering announcement. The primary drivers of revenue growth or decline for a pharmaceutical company are largely influenced by its ability to successfully develop and commercialize drug candidates. Key factors contributing to revenue growth include regulatory approval, successful clinical trials, commercialization capabilities, strategic partnerships, and sufficient capital funding. Conversely, revenue decline is often the result of failed development and commercialization efforts, delays in clinical development, regulatory issues, clinical trial failures, and volatility in stock prices. Additionally, market opportunities, competition from other companies, effectiveness and pricing of competing products, and reimbursement coverage also play significant roles in shaping a company's revenue trajectory. Ultimately, a pharmaceutical company's ability to navigate these factors effectively will determine its success in driving revenue growth or mitigating decline. The company's net income and profit margins have experienced significant changes over the period in question. Initially, the net loss increased from $76.6 million to $52.4 million, indicating a worsening financial situation. This decline can be attributed to various external factors such as tariffs, trade restrictions, geopolitical tensions, inflationary pressures, foreign exchange volatility, and economic downturns. Profit margins have also been negatively impacted, particularly due to price controls in foreign markets and reduced protection of intellectual property rights. The company's inability to generate taxable income has likely further contributed to the decline in profit margins. Overall, these changes reflect a challenging business environment that has hindered the company's financial performance. Management is projecting a challenging outlook for the company due to its focus on clinical development of azuprubart, which will require significant investment. They anticipate incurring substantial losses in the foreseeable future and may never achieve profitability. The company's ability to generate revenue depends on obtaining regulatory approvals, which is uncertain given intense competition from larger pharmaceutical companies. Management expects to devote substantial resources to research and development, but also faces potential delays in clinical trials due to various factors. The company has made several key acquisitions and divestitures. In terms of acquisitions, the company has secured exclusive rights to develop, manufacture, and commercialize azuprubart worldwide, excluding mainland China, Hong Kong, Macau, and Taiwan through an agreement with Shanghai Jiu Pharmaceutical Co., Limited. Additionally, it acquired exclusive rights to tivumecirnon in a specific territory. On the other hand, the company has made some divestitures. Notably, it ceased development of zelnecirnon in November 2024 due to unforeseen circumstances. Furthermore, 2 clinical trials for asthma and atopic dermatitis were closed after a serious adverse event occurred. The company's financial summary reveals that it has a history of not distributing profits to shareholders through dividend payments. In fact, it explicitly states that it does not anticipate paying any cash dividends in the foreseeable future. This indicates that the company prefers to retain its earnings for growth and development rather than rewarding investors with dividends. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. Several potential risks have been identified that could impact the company's operations. Delays in manufacturing, limited or interrupted supply of components or materials, and failure to execute on manufacturing requirements pose significant challenges. P41. The dependence on a single supplier, JU, for clinical drug supply also raises concerns about potential difficulties in obtaining regulatory approvals and enforcing patent and intellectual property rights internationally. 44. External factors such as trade disputes, tariffs, and geopolitical tensions may exacerbate unfavorable macroeconomic conditions, leading to increased preference for local competitors and decreased intellectual property protections. P. 46. Additionally, general supply chain issues may be exacerbated during disease outbreaks, epidemics or pandemics, natural disasters, and cyberattacks on third-party vendors. pp. 47-66. These risks highlight the need for careful management of inventory buildup and supply chain disruption to ensure business continuity and mitigate potential losses. That concludes the financial summary for RAPT Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.